Hi, I'm Brien Lundin of Gold Newsletter, and I am here at the Toronto Metals Investor Forum. I have the great pleasure of talking to Greg Smith, Vice President of Exploration for Newcore Gold. Greg, Newcore has been a long-standing recommendation in our Gold Newsletter portfolio, a great performer, as just about everything is these days in this market. But Newcore has come such a long way. And I was just talking before we got on camera, when I look at your presentation, every slide has a very powerful message. There's so much to talk about in Newcore. You've got a multi-million ounce project growing in Ghana. You've got extraordinary economics. One of the things I want to touch on is how the IRR just explodes at current gold prices for that project. But the exploration potential, I think, is the most powerful. Well, before I get to that, let's just set the stage for us on the Enchi project in Ghana for Newcore. And then we're going to explore all of the exciting attributes of that deposit.
Yeah, thank you. It is an exploration development story, as you've said, and we ourselves even have a challenge balancing the two in terms of moving forward what is a very robust project at the economics that we've outlined in our PEA and that we're working with now for our PFS. And then combining that with some true exploration where we've got all of the deposits that form our resource are open along strike and to depth. And then we've got some whole other areas where we either have just put a few holes and don't have a resource yet or haven't drilled at all. And as a geologist, those are very exciting.
Yeah, and you're getting high grade too, which I guess kind of bleeds into another point I want to make. The mine along trend, another mine that's been operating for 2 decades, goes to much greater depths than you've drilled yet. And it's in the same rocks. It's right along trend. It's a perfect analog. And they're mining really low grade at depth, 2 grams per ton, which speaks to the economics or the mining costs are so low there, relatively low in that region. But you're getting high grade at depth, which shows that, is that high grade comparable to the other analogs in the area, or is it better? Or what are the implications of those high grade hits?
I think it's quite similar. Although Toronto is, as you mentioned, sort of their average is around 2 grams or a little bit less. They will as well within that have some narrower, higher grade intercepts, much like the results that we've released in the 2 news releases this year. So we had 2 narrower zones, a meter each of 147 and 174 grams per ton. But then we combined those with a couple of others that were, more than 20 meters wide at 2 to 3 grams per ton. And basically you need those larger average grade zones, if you will, and narrower, higher grade ones to make an actual underground deposit.
So when you're hitting that high grade, it's actually supporting the analog to what's along trend of the Toronto mine. Now they're drilling to 800 meters depth or so, and your average drilling is so far is only to 150 meters. So that really speaks to some potential.
So all of the material that was in the PEA and as well all of the material that'll be in the upcoming PFS are pit constrained. So those are within that first 150 meters of surface. And now these first 2 news releases we did this year were just another 100 meters max below that. So down to about 250 meters. So that really does give us quite a ways to go to continue to find.
And it's showing that it is extending to depth.
It's the same geology. It's the same structural control. I mean, we have no plans to be drilling a kilometer depth anytime soon, but certainly we're very comfortable that when needed, it'll be there.
And you've shown the market that it is the same.
The proof of concept with these first 2 news releases we did this year, again, these wider average grade zones and average underground grades of 2 to 3 grams. And then these narrower sort of bonanza grades are exactly what we expected to see.
Now let's talk about how advanced you are. PEA shows extraordinary numbers going to a PFS. The economics seem particularly robust to me. Especially the sensitivities to higher metal prices. I mean, in the PEA, what was the base case metals price? 1850?
1850.
Yeah. And of course, we're a little bit higher than that. How does that leverage work? How does that leverage look in the economics?
Yeah, it gets back to the fact that it's a real doable project. Again, nice, decently wide zones at good grades, open pits that you can start with. So, there's not a lot of excess capital up front in terms of pre-stripping or anything like that. And these greenstone hosted gold deposits, like all of our neighbors, they're pretty straightforward metallurgically speaking. So certainly from the PEA to the PFS, the big change is, of course, we're going to a CIL plant as opposed to what was modeled in the PEA, which was a heap leach, and that's largely based on the 12 to 15% additional recoveries that we'll get using the CIL. And obviously, at these gold prices, that pays for itself.
It really does. So that's going to imply what in the economics? Higher CapEx?
Higher CapEx up front. Now, we
Yeah.
will be able to stage that. Like all projects, you don't have to build everything vis-a-vis your life of mine all on day zero. But yeah, it'll be higher CapEx, but it'll be better recoveries. It'll be probably a little bit better production profile as well. And probably we haven't actually done all of these numbers yet. The study's in progress, but a similar payback. And so you spend a little bit more money, but you get that back in about the same amount of time. And then what the CIL does give you is again, when we transition to underground to these higher grades, that's the mill you are always going to want anyway. So
okay, so you're saving from the CapEx at that point.
Yeah.
And at these gold prices, you want to make as much gold as you can.
And recover as much out of that ton of rock that you're spending money to mine and to crush and to process. So yeah, you don't want to leave anything behind.
Talk to us about the size of the current resource. Are we going to have any updates to that? And how does the exploration potential look to increase it eventually?
Yeah, so it's after the PEA, we didn't stop working there. We did a series of gap analysis to know exactly what we needed to do to be able to do the PFS. Of course, one of the main things there was one of the big differences is you can only use measured and indicated resources in a PFS as opposed to the inferred that can be included in the PEA. So we started right away, and then we've completed all of that infill drilling. So we'll be, in terms of the existing resource that we have now public, it's 740,000 ounces indicated, 950 or so inferred.
Okay.
So what we were doing was looking to convert, the majority of that inferred into the indicated, and basically give ourselves a base of 1.3, 1.5 million ounces indicated, which was the overall number in terms of the mine plan that we used for the PEA.
Will that end up giving you a larger overall resource, including inferred, even if you can't use the inferred in the?
That's what we expect. Yeah,
Okay.
they're working on those numbers now. But in as you continue to drill and move the level of the indicated down, then that you're kind of moving the inferred in front of it as you go. Like pushing snow with a snowplow. So.
Right. And as far as exploration, we touched on the potential at depth. What about along trend and in other deposits?
Yeah, absolutely. In particular, our two largest deposits. So in the mine plan and the PEA, over 80% of it came out of two adjacent deposits, Boyne and NCAU. They continue to be our largest deposits and are open along strike as well. So in terms of the next phase of drilling that we do, we'll be doing some more, inexpensive near surface RC drilling to expand the resources there.
Yeah, it's always important to show the market upside and a little mystery left in the deposit, but at some point you have to cut it off and say we've got to go. The company has done a great job of doing that, in my opinion. At some point saying we have to move toward development, de-risking, and building the value. Is this a project that you anticipate Newcore will bring to production, or is that just an option?
It is an option, and we always say with conviction that we'll do whatever is in the best interest of the shareholders. And there's certainly evidence that bringing a project like this into production obviously helps in terms of multiples and share prices. And there's never any guarantees there, but if you do it correctly, as you've talked about, the economics here are very robust. We've got a strong shareholder list. 55% of it is institutionally held, and including obviously some funds that could participate and get that financing done if that's what's in the best interest.
Yeah, it's always been something where juniors will, in most cases, actually bluff that they'll bring it into production. But if you can genuinely bring it to production and you have the expertise to do that in a market like this, you can get the money to do it, but because the CapEx is not that high. So it's not a bluff anymore. You can actually do it and maximize the value for shareholders. It is a company that in this market, I think is undervalued, and importantly, the growth potential shows that it's going to be at some point one of the leading mines out there. Greg, thank you for joining us. Lots of potential, lots of catalysts coming up over the months just ahead. So great time to get on board Newcore Gold.